I have to get on the whiteboard, Kevin said he was writing. Very what? That's not working. Let me see it. I'm gonna need to play with this. For 11 months. Yeah, so I'm good. Oh, really? So how does it work? So this way.
No, well, you just press the button.
What button?
This button.
Oh.
If you can't figure that one out, we're at this one.
Hmm?
How's that, sir?
Good with me.
Does your clicker work or you got to use your... You're good? All right. And it looks like you're on. Any how's it going?
Hello? If you have to write on the board, you get to write. Yeah. That's even better. Good? Guys, welcome. I'm Jake and Fox, Thrivent representative. Zac Obrien, business partner, and that is Amy. She is our, yeah, she's the one that keeps us together. Before we get started, we'll start off with a prayer. I'd ask the pastor if he would give us a quick prayer, and then we'll get started.
Heavenly Father, please bless our evening. Thank you for bringing us together tonight. Bless our fellowship. And please bless us as we go over.
So, before we get started, how many of you are Thrivent members already or familiar with Thrivent? Okay, so first slide. This is Thrivent in a nutshell. We're an organization of Christians. We like to help our clients with their money to produce living generously, which helps our members and families and their communities thrive. So we're big with helping our members be wise with their money. And also, in turn, living generously is a big part of what we do. A little bit more about us. We're 100 plus years old, so we've been around for a while. Membership owned, we have more than 2 million members. Number 318 on the Fortune 500. I like to tell people volunteer hours, 11.3 million hours. That was in 2016, and we donated a little over $217 million to help others. So we're a big component of giving back and helping our members give back to their communities. We earned AM Best Superior Highest Rating, Fitch's rating, and named one of the world's most ethical companies by Ethisphere. So that's a little bit about us. We did start in a Lutheran church, so we're a little more well-known in the Midwest, I'd say. Zach and I, we work out of Advance. Our office is there. We've got clients as far as Burlington, and then the other way as far as Asheville. So we cover pretty good territory on 40. The number one reason that I work for this company is the faith. I'm a pastor's son. My grandfather's a pastor, my brother, and about 4 of my cousins. So being able to talk to my clients and our members about our faith, and to be able to, console someone that's lost a loved one, and to bring that spiritual aspect is the number one reason why Zach and I work for Thrivent. It's a big part of what we are, what we do, and we really enjoy getting together and coming into churches and discussing a little more about Thrivent and what all we do offer. Tonight will be a big part, will be long-term care. We're going to discuss what long-term care is. We're going to give you a brief overview of what to look for, what are some questions to ask, and how a long-term care plan is needed by everyone. So what is long-term care and what is not? So when you hear long-term care, what do you think of? These are non-rhetorical. So nursing home. What else? You get to write that down. I'm going to make Zach do some work. Kevin, be on standby. If his writing's sloppy, you're up. Yeah, so, and it's a good way to put it. So is anybody here currently a caregiver or has been a caregiver in the past? Okay. So there's quite a bit to being a caregiver. Little brief story about me. My grandfather just passed away 2 weeks ago. About 9 months ago, my grandmother passed away. These are both my dad's parents. My dad was the caregiver for my grandmother for about the last 3 years, and my grandfather about the same. Watching that personally was a big eye-opener for me as well as my family, but also my father. So I've been doing this for 3.5 years, and my dad's at the point where, he's been pastoring the same church for 36 years, and mom and dad are getting to the point where it's time to start looking at some long-term care and what's the plan. And dad's always kind of brushed me off about it. He's like, we'll get to it. Well, about 2 weeks ago, Dad was like, we need to talk. I was like, if I can get you to talk to me, I can get anybody to talk to me. But it's Dad going through that and being a caregiver, as well as my aunt and uncle, it's very rewarding. I could see that from my dad. He was very proud. My aunt and uncle, they were very proud of being able to take care of their parents. But it's also very emotionally draining, and it's very financially draining, and it's very stressful. Because my dad is a pastor. He is not a nurse. My sister is actually a hospice nurse. So my sister was a big part of that as well. Even though she was a grandchild, she was a huge part of my grandpa and my grandma being able to stay in their house. Because that's another part of long-term care. We want, it's not just nursing home. There's a lot of different facilities that we can get into. And, my mom and dad, with their plan, they want to stay in their house as long as possible. And I see that a lot. Wanting to stay at the house as long as we can. So it's not just about your future, finances and feelings, it's about the family. Having a strategy in place gives your family the opportunity to care about you rather than caring for you. So that's what we're talking about when it comes to the emotional and the strain of taking care of somebody full time. Because it's going eventually, a lot of times it starts out maybe helping them get the day started, and then it turns into full-time care. And that's where long-term care can really help bridge the gap between what you need and what you want, what you can afford. Because that's what the plan is. We're not just talking, this is not an insurance talk right now, this is a plan. Long-term insurance is not for everybody, but a long-term plan and long-term care plan is for everybody. So we want to keep that in mind as we go through this. I'm going to fumble through that slide. It's what you'll experience when you become physically or cognitively impaired. So long-term care, what are some things that you think about when you think about impairment, about stuff that you would need long-term care for. You know, I like to get people involved and get you talking about what are some things that you think long-term care helps, or what are some areas that you think long-term care can do? Because a lot of times, like you said, you just think of nursing home, but these plans can do a lot more. And a long-term plan can mean maybe I need help getting over a broken leg when I'm a little older in life. You know, my grandfather broke his hip at 84. My uncle broke his at 38. A lot easier for my uncle to get over it than my grandfather at that age. So there's some things to think about. Long-term care is not something, I had it explained to me one time. Long-term care is teaching you how to live the way you are, living with what's happening, instead of medically where you're trying to get better. And, you know, a lot of time you think of stroke, Alzheimer's, and stuff like that. That's where you're kind of relearning how to live through certain things. And that's where, you know, long-term care plan can really help alleviate a lot of stress with the family.
What we found with long-term care, especially in families, is the standpoint, when there's multiple children, a lot of times they don't have a plan put in place before the situation comes about. One of the siblings takes on a bigger role, and all of a sudden that sibling that takes on the bigger role has resentment towards their siblings. And then all of the siblings that might have had a pretty good relationship, all of a sudden are all fighting about, well, I had to go take care of mom last time, I need you to go take care of mom, I've got to do these things. And it was a big stressful situation in a sense for the kids. And it's not to say that long-term care isn't having the kids come take care of it. But if the kids don't know that, and that's the plan, the kids need to know that's the plan and become on board with the plan. A lot of our clients, the kids will come in and take care of mom and dad, and that's what they want to do. Like Jake was saying, his sister, she's a hospice nurse, she will be the one that will go in and take care of it if she wants to. But that is already a plan put in place. And everybody understands that and has that expectation going into it. It's not, well, I'm just going to take on this big burden of taking care of mom and dad. And my sister lives 4 hours away, and she comes in and visits on Thanksgiving and Christmas and acts like everything's okay. And I've changed my entire life now to take care of this person. That's not having the conversation before you get into it is where the problem lies. If the kids understand that's what the situation is, or you can sit there and bring in something like a long-term care insurance policy to help cover some of those things. We talk with our clients all the time. It's not a matter of having a Cadillac plan. I mean, there's people out there that sell long-term care insurance that want to come in and sell you $10,000 a month benefit forever on your benefit rider, and it's going to be $8,000 a month. Great. That's crazy. A lot of times people need just something to cover what they can. A long-term care plan doesn't have to be a Cadillac driving down the road. Something that gets them from A to B and covers some of what they need is better than putting all the stress on the kids or on the family in that standpoint.
There's a family who had long-term care insurance in the system, and that was one piece of it. What they did was there were 3 kids. One handled the finances, one took mom to every doctor's appointment, whatever. That was his job. And then the third child did everything for him. Go to the beach, go to conference, go shopping, or whatever. And that has worked in what I've seen, that has worked really well. The kids like it, they're all on the same page, they have a plan going into it. And so that was a bigger deal than just the insurance part, which was good, absolutely. But yeah, so I've seen that.
Having that tough conversation with the family to create the plan and create what you would like. You know, maybe you get to the point where you're not able to speak for yourself and what you want to do, but they already know the plan and know what your wishes were and what you wanted to happen. That's the hardest part is discussing it with the people that's going to be caring for you. And then there's, you know, back to it, there's 3 primary levels of care that a person might need. The first one is personal care. That's often provided by the spouse, the kids, and, you know, that's more the in-home and consistent of, you know, helping you with activities of daily living, bathing, you know, moving from chair to chair, you know, eating, cooking, stuff like that. The next level was intermediate care. That's where, you know, skilled nursing care, adult daycare, or somebody may come into the house. And then the third level is the scared care around the clock. It's getting where we need a lot of care and a lot of help. Another example, my mom's dad, actually, my grandfather, was a big man. He's 6'3", he's a pretty big boy, about 240. My grandmother was 5'1" and 100 pounds soaking wet. It got to the point where she could do a lot of the stuff for a little while. He had lung cancer. But when it came to the point where she had to help him out of bed and help him, bathe, that put a lot of stress on grandmother. So he had to eventually go into, a hospice house or skilled nursing care. But, they had, again, a lot of help from people in the family. We've got a pretty big family. And that's where it goes back to the plan is what does it look like? How are we going to accomplish that? And, the biggest thing is how do we, making sure we get our plans and our goals spoken so we know what's going on. And then we work around that. Like, can we afford long-term care? Can we do it, do we self-finance? Do we do other things? And making sure that we get the goals accomplished and make sure we get it taken care of, like you said, to that last part of protection of what you've got. So a lot of times, where we call them triggering events, where a long-term care insurance or, what happens is a triggering event causes them, that's when you need help. That's when the policy will kick in. And what happens is two of the activities of daily living you need help with. Bathing, dressing, transferring, feeding, countenance, and toileting. So those are the 6 where some policies have you have to be able to have help with 3, and some are 2. It just depends on the policy you have and what you're looking for. And those are some questions you want to ask when you're shopping this around or shopping a long-term care. Is what are some of the triggering events?
Or cognitive impairment.
Yeah.
So Alzheimer's, dementia.
So these are standards for ADL. These are all things that this is standard. 2 out of 6.
2 out of 6 is the standard in Eagle. Some of the
policies.
correct. That's when most policies, anything that's been written in probably the last 7 or 8 years, is going to be pretty consistent. Anything that we've seen around the marketplace is 2 to 6. Some of the older policies were worded a little different. Long-term care actually is a very new insurance, insurance. They actually started in about 1998, so it's not been around very long, it's only 20 years old. The really interesting thing about long-term care, when it first came out, it was designed for nursing facilities only, where we had, $1,000 or $10,000 a month to pay for a nursing facility that would cover $2,500 for in-home care. Most people want to be in their own home. So the industry has changed. The second thing that was really interesting to me was they thought they'd be close to the 25% lapse rate. What that means is people took policies out, 5 years later said, I don't want it. Anybody want to guess what the lapse rate on the long-term care policies are?
5%. Let's say it's less than that.
It's less than 1%, 0.65% of long-term care policies lapse. Again, the reason is, people understand if they bought long-term care, they bought it for a reason. Nobody is sold long-term care. Nobody. They buy it for a reason. They understand what it is, and they understand that it's the last thing that is there for their family. And so none of these things lapse. And a lot of people saw a big rate increase about 5, 6 years ago because the insurance companies that had the contracts thought their rates were appropriate for a 20% lapse rate. When there's none of those lapse rates coming into play, there are a lot of money, and they were backpedaling hard. And they changed the premiums pretty dramatically.
So the 70% of people that are 65 right now will need long-term care at one point in their life. 70%. And the problem was, in 1940, age of 65, there was a plan of 13 years after 65 was the plan. They had it, you were going to live 13 years after you're age 65. Anybody 65 and older now, you're going to live, a male's going to live, I think 19.3 years, and a female's going to live 21.6. So from 2015 to 2055, the number of people that will be 85 and older will triple. There's 6 million right now. There'll be 18 million people age 85 and older by 2055. That is a staggering number. Staggering number. And then, it goes back to, there's, not to dwell on the numbers, but let's face it, long-term care is, it costs money. And just like everything else, the cost is anticipated to rise. Like it's showing here, the historical inflation cost will exceed $286,000 in 30 years. So obviously this could put a dent on retirement planning and how you've retired for what you've looked at for retirement planning. This is a big part of it. Long-term care is a big part of, everybody's going to need it. And I can't reiterate that enough. And seeing it firsthand in my family, you need a plan. And you need to make sure that your family is aware of your wishes and your plan. So how will you pay for it? There's four major ways that we see people pay for long-term care. Relying on our family to pay or provide our care. We see a lot of that here. The family helps provide the care. The biggest thing with my family, my sister is in charge. She's the oldest, and she's in charge. And when I talked to her about this, it was a big thing because she's seen it firsthand. Being a hospice nurse and being around these families with people that are losing their loved ones, you see the emotional side of it, but you don't see the physical activities that you have to do as a caregiver. And that's one of the biggest reasons I talked to my sister about it, because knowing my sister, she's going to, literally kill herself taking care of my parents. And I know that. But what we put in place is she's going to be in charge of picking who takes care of our family, who takes care of mom and dad, where they go, who's going to bring them in. And the great thing about that, not everybody has a hospice nurse as a sister. But with us, you have a care coordinator. And a care coordinator is huge. We deal with them quite a bit. They take care of knowing the area, what facilities are the best, what facilities you're looking to go into. They take care of the stuff that we don't, as normal people, we don't know to ask the administration. Where's the best nursing care, how to get them in there, help them with the paperwork, and helping take care of your loved ones. You get a care coordinator that's really big and really, really educated in this side of long-term care. So that's a big part of it too, is making sure you have somebody you trust and that is going to have your best interest and take care of you. We see government programs. A lot of times I hear Medicaid or Medicare is going to take care of us. Don't count on that. You're not going to get a whole lot of help from Medicare, if any. And Medicaid, you got to do what's called a spend down, pretty much, where it's going to take all of your assets that you have to be able to get into whatever facility is Medicare approved or Medicaid approved. brief hit on what Medicare does. It only kicks in after a 3-day hospital stay. Full cost of skilled care for only 20 days. Partial cost from day 21 to 100, and only as long as the health improves. Does not pay for personal or custodial care, and home health care benefits are very, very limited.
So Medicare is part of it, but you say Part A, Part B is a part of it. And what a lot of people think is, well, I'm going to have surgery, I'm going to need in-home health care, and somebody come to the house for surgery for a hip replacement. Happened to a client a couple weeks ago. But no, it's not. You're going to get better. And the way that Medicare looks at this is we're not paying for things that you're going to get better from. That's what long-term care and Medicare are very different. And that's why I said earlier that with long-term care, it's for something that you're going to live with forever. It's not something that's about to change. If you have hip surgery or in bed for 2 weeks or 3 weeks trying to get ready and get better, you're planning on getting better. It's something that they see and they know that you're not going to change it forever. That's where Medicare would come in from that, from surgeries and things like that. Part A, Part B is what the Medicare supplement plan right now is some of the best insurance of that. For the cost, especially if you went from being somebody that's 63, 64 years old and having to pay for health insurance right now, current prices that we're in, people were sitting there, it blows over the line. It's $2,000 or $3,000 for a hobby level. So basic for a individual plan in North Carolina for health insurance. And so if they get the Medicare Part A, Part B, they're really excited to get there. It's a great insurance policy and a great health insurance plan, but it is for health insurance when you are getting better. It's not for something that is going to be there forever.
And then Medicaid is obviously the federal and state programs. Each state has its own eligibility, and in most cases, individuals' income must be less than the cost of care. So that's where a lot of times where it's going to bleed through those assets. It's going to take everything you have. Providers have control where how the dollars are spent. Things to consider: do you have sufficient funds available to pay for care? Is there a chance that your spouse may need to alter his or her lifestyle to help you? Do you want to pass on money to your family or to a charity or church? And have you talked to your family about providing your care? Those are things that we're going to, we've talked about it a lot, and I'm going to say it a lot. That's the hardest thing, is having the conversation. It helps protect your family. Paying benefits when you need care. Long-term insurance provides you the freedom to choose your care. That's the biggest thing we want to do, is help you choose your own care. How do you want to be cared for, and what does it look like for you? Depending on Medicare and Medicaid, you're not going to have a whole lot of options. You're going to be limited. Giving you access to a care coordinator, we talked about that, and helping your family supervise and provide the appropriate level of care. So when you get a long-term care policy with us, it's not just we're going to tell you what to do and where to go and how to do, and that's it. You're going to have options. You're going to have a coordinator, and you're going to have your family involved in how and what you want to be done. And that's important to know with long-term care. Is what the biggest thing is you want to ask. What are some of the benefit periods? What's the elimination period? What are some of the triggering events? You want to make sure that you know the policy very well. You want to ask the questions, be educated on exactly what you're paying for and what the insurance covers. The big thing with Zach and I always want my members and my clients to know exactly what they bought and why they bought something. I never want them to be out somewhere and somebody asks them why they have something they don't know. And it may be different. Everybody's plan and everybody's goals are different. Everybody's strategy is different, and products don't work for everybody. But I want to know exactly why. I want my members to know exactly why they have something and what it's for. When you become chronically ill or cognitively impaired, two of the activities of daily living, they're expected to at least 90 days. So a lot of times we see a 90-day elimination period. So what that means is, after the 90 days, that's when your coverage will start. So that's why we see a lot of times we want to make sure we have, 3 months of bills, and then that's when the long-term care is going to kick in. That's what that means by elimination period. And it's also what you can afford. I mean, let's just be honest. What can we afford, and what's the plan from there? I mean, I tell people all the time, we're not in the position of putting you in something that you're not comfortable with and you can't afford. That's just bad planning. You know, each situation is very different, and long-term care is becoming a really big issue. That's why you're starting to see, you know, federal and state help programs such as the partnership program, because they're losing an enormous amount of money on facility care and nursing care. I mean, it's unbelievable. I mean, I'm surprised, and we may see it soon, they're going to start requiring long-term care. It would not surprise me if that happens, because it's becoming an epidemic with how much it's costing them, and that's why they do those partnership programs. But the biggest thing is we want to make sure that when we sit down and talk to somebody, it makes sense, it's affordable, and that's where the plan comes in. There's around 35% have adequate care.
In our personal situation, it was estimated at 20.
Yeah, that could.
Like in one nursing home situation,
Wow.
our family was told that 75% is our own government program. Yep, and then the other 25% just, they didn't pay, so.
We lost everything. Remind me to get some insurance on him. Yeah, we're gonna get some life insurance on him. So a couple key terms I want to go over. Make sure you understand. So when we talk about it, we have a pretty good understanding. Available benefit. So that's the pool of money that you'd be available for in the long-term care insurance. So when they say pool of money, the available benefit, that's what that's called. So that's what the amount of benefit you have. Sometimes people will do it. You will see it daily on contracts, or monthly, or annual. You'll see one of those three. Benefit period. That's how long it'll pay out. You can have one that pays out 2 years, 8 years, or however you want to. That's the benefit period. Comprehensive care, cover for multiple care settings. Like we said, home care, skilled nursing care, nursing facility, adult daycare. That's the comprehensive care. Inflation protection. We've got several options on that as well, but those are something you want to ask. You want to make sure that you have inflation protection of some sort, depending on the age you buy it, and making sure that you understand what that inflation is and what it means. Shared care rider, that's for couples where you buy it together. We have that. If you buy it together, I think it's a 20% discount when you put it together, something like that.
All of these are just common terms for long-term care services that hopefully somebody, when you have the conversation, whether it's us with somebody else, just have the conversation with understand. Available benefit, that pool of money, typically what you will see
take action. Start the conversation. Have that conversation. What's important to you? The consequences of not being prepared for you and your family. Whether your strategy reflects your faith and your values. The strategy to pay for your long-term care is one of the greatest gifts that you can give yourself and your loved ones. Develop an extended care strategy that fits your financial goals. Help initiate the tough conversation with your kids or who's going to be giving you your care. Understand the value of a care coordinator and ask the questions that determine long-term care insurance is right for you.
We've seen a lot of progress in the last few years. Some of us like, I want personal care insurance for my parents. Mine are in their 40s, 50s, and mom and dad are both state retirees. I'm 50 with them, and mom and dad just can't afford it. But we work, me and my brother, or me and my sister work, and I can't take time away to go help mom and dad
it's very situational, and one thing we do with our clients is we make sure that whatever happens, we're going to create a plan. Whatever, if it's not long-term insurance, then it's going to be something. We're going to find a way to create the plan that we're looking for that makes sense. Makes sense financially. That's where that comes into. We're going to do what makes sense, and each case is different. Not everybody's going to be able to get long-term care, but we're going to. The biggest thing is creating a plan of how we're going to pay for it, or how we're going to situate it if something does happen.
So do you recommend shopping around for different policies?
Absolutely.
Different companies?
Absolutely.
I mean, so it's not completely random.
Absolutely. But make sure you're comparing apples to apples. Because I've seen a lot of stuff where you get a quote from somebody else, and then you come to us significantly higher, but give us a chance to explain why. Or vice versa. Make sure that all the benefits and everything is the same when you're shopping rates or shopping companies. That's the big thing too. I see a lot of stuff where you don't have. We're comparing A to B, and that's just, it doesn't work.
Make sure you understand the rating of the company as well. Just understanding that the company might be a C-rated company out there, might have a little less, the premium might be lower than a company that's A or A plus plus rated, to the standpoint that they may or may not pay the cost of their claim out. Just thinking going into that, make sure there's great companies out there. Some of them will tell us, like, look, we find a better cost for you. Take those costs. That's just the other side. We want to do the best we can man. Taking an eye of our young in our careers, and this is something we want to be doing for a very long time. Not just for our kids, something we can take care of our life. Not just from the standpoint we want to do this for a long time, but just our personal too. Going back to who Thrive is, we've been on a ethnic sphere since 2012, beginning of the race for those ethical numbers. 2012, when we were put on that list,
That's when it started.
we were the only financial institution that worked with individuals. There were 4 other financial institutions, but they didn't actually, they worked with corporations. And raising companies on their head, doing the right thing, being a good person. Wow, what a concept. But that's what's important, is doing what's right for people. And making sure that they have different opportunities, the best opportunities they have.
Draw good maps if you do that. Also, will wills are great, but there's also one more step after a will. You need to make sure all your beneficiaries match. So whatever the will's great, and everybody thinks that's going to supersede a lot of things it won't. Whatever's on that piece of paper that says beneficiaries is who's going to get paid. You need to make sure you have a beneficiary. I call it a beneficiary checkup the day after your birthday every year. You need to make sure your beneficiaries are up to date, and you need to make sure you have beneficiaries on everything you have. Keeping stuff out of probate was a huge deal and is a huge deal for people. Not just in the essence of it's public knowledge, but it's also going to take a long time to get. It's going to take 9 months to get out, and you're probably going to have to pay an attorney anywhere from $1,200 to $1,700 to help you do it, because you're going to have to close that estate. Yeah, it's public knowledge. So those are things you want to make sure the beneficiaries and what you have, because I see a lot of clients that's got a will, and then I've still got an ex-wife or somebody as a beneficiary, and I'm like, might want to change this. Might want to change this.
We had a client 2 years ago. She called. Well, I've been calling for her husband every year. We need to review contract insurance. What's the insurance? I've just got insurance law that has 30 years plan, has 25 years running. Call them, and they're all things of my husband has to hear that. And then Sarah.
Mm-hmm. You might have to go all the way to Canada for that, buddy. Yeah. Yeah, you're going to have to go to Canada, I think. They're always nice over there. Guys, thank you so much for your time. We have some appointment stuff back there. If you want to sit down and talk more about it, we'd love to talk to you. Thank you again. If you have any questions, again, our contact stuff is in the folders. We look forward to it, and thank you for... One more time? I'm sorry. Call the office. Email me, jakin.fox@thrivent.com, Jakin. It's a weird name. I'm right pillar of Solomon's temple. Remember that. Look that up. That's biblical. Our phone number at the office, 336-794-1592. Give us a call. We'd love to talk to you about any products that you may need, any long-term care, or any financial products. Thanks for being with us. Sorry if the glare off my forehead blinded you on the computer. I did wax it before I came. And God bless and have a good evening.